Buffett loves companies that pay dividends. He absolutely loves companies that pay dividends, and so do I. And there is an elite group of stocks out there called the Dividend Aristocrats. Okay? These are companies that have not only paid a dividend for at least 25 years in a row, but have increased their dividend every year for at least 25 years in a row. Warren Buffett is the largest shareholder of CocaCola. He has about 400 million shares of CocaCola stock. Wow. CocaCola is a dividend aristocrat. They've raised their dividend for, I think, 51 years in a row now. They've raised their dividend. And he's been investing in the company, he's not investing anymore, but he's kind of reached a point. He owns about 10% of the company. And so over the years, he's invested about almost $2 billion in Coca-Cola stock. The $2 billion just in the market value of the stock is about $15 billion right now. So obviously and again, he's owned this stock for 30 years, if not more. So it's been a great appreciating asset, and he's very happy with that. But the real key to his success with Coca-Cola is the dividend. If you haven't read Buffett's letters to shareholders, you should go to the website. The company that he does all of his magic with is called Berkshire Hathaway, Berkshire Hathaway. And yeah, the Hathaway is a reference to the shirt company that he bought back in the 50s. One of the first investments he made, it went bankrupt and went away. So not all of his investments are perfect. But you should go there and read his letters to shareholders. They just this year celebrated their 50-year anniversary as a public company. You can go read the letters all the way back. A couple of years ago, 2010 letter, he said by the year 2020, we will receive a dividend from Coca-Cola that year equal to the amount of money we've invested in the company. He's invested $1.9 billion in Coca-Cola stock. In 2020, he will get paid a dividend of $1.9 billion. And the next year, it'll be a little bit more because they'll raise the dividend again. And the next year after that, a little bit more because they'll raise the dividend again, and again. Is that something that is only a great mind like Warren Buffett could come up with? Its genius is its simplicity. Okay? By investing in great American companies, holding on to those companies for the long term, and taking advantage of the power of that ever-growing dividend. Ever-growing dividend. If you look at the Dividend Aristocrats, is that all of them, buddy? Yeah. Okay. You're going to see a lot of names on there that you know and understand, and these are all companies that have raised their dividend for many, many years in a row. Obviously, if you're going to raise your dividend, what does the company have to do before that? Make a profit, exactly. They have to have more money coming in order to increase the dividend they pay to you. You don't ever want to own a company where the stock, to pay that dividend, they have to go out and borrow the money. Okay, that's not a good thing. These are not companies that do that. And it's always interesting to me to see the kinds of companies that do this. But a lot of them are well known. A lot of them are companies you probably never heard of. But they are, most of them, obviously great American companies with this great tradition. So dividend paying stocks, that dividend serves two purposes. Number one, in a tough market, it can be a cushion. The stock can go down, but that dividend of 2, 3, 4%, whatever it may be, and that dividend goes up every year as a percentage as they pay more dividend, is a nice cushion in a tough market. When the markets are going fine and going up, that increased dividend is like the afterburner. It just enforces the rise that you've seen by adding it all. And the most important thing, if you possibly can, if you don't need the income, that cash flow in the form of the dividend, most important thing you can do is reinvest that dividend. Question is a good one. I talk a lot about dividends, but what other things would you want to factor in making a decision to own a stock? I look at two other things, basically. And again, this is just me, and I don't buy stocks. I haven't bought a stock for a long time. I'm very happy with the ones we have, and I just let them go. We're comfortable with them. I look at two things. Number one, I really prefer to invest only in companies that are number one in their industry, whatever their industry may be. It might be shampoo. It might be furniture, whatever it is. I want them to be the number one company in that industry. okay? And number two, I look at revenues, okay? Quarter by quarter by quarter. I want to see revenues going up. That means they're selling more of whatever they sell. They sold more of them. That doesn't necessarily mean that profits are going up, but that will follow over a period of time. So if you see a company that's a leader in its industry and their revenues go up year after year after year, that to me is comfortable, is encouraging, and a couple of things. Now, there's a bazillion people out there that can give you all kinds of things to look for in selecting stocks, and most of them are short-term oriented. But for me, those two things work very comfortably.